Happy Wednesday and welcome, traders. I am Rachel Deshelle, your host for this trading price patterns class and head of technical research and strategy for Schwab Center for Financial Research. I am happy to have you join me today because I have some fun things that we're going to look at. A lot of different charts. We're going to focus in on the energy sector. We're going to do a little bit of intermarket analysis possibly, so looking at different asset classes as well as relative strength trends as a little bit of a top-down analysis approach when we're identifying some of these price patterns and putting these trades into force. Now, I am joined in the chat today by my good friend and colleague Mike Fairborn. He is there to help answer any questions, comments, concerns through our chat, all the ones that I cannot get to today. You can also give him a follow on X. He is Mike Fairborn CS. I am Rachel CS. So please give us both a follow there. Please also like this video, give it a thumbs up on YouTube if you find it useful. It does help other traders find it as well. And please subscribe to us on Trader Talks Schwab Coaching. Now, before we dive into the charts, let's take a look at some of our important disclosures here on the screen. So options do carry a high level of risk and are not suitable for all investors. The information that we're going to cover here is for general informational and educational purposes only and should not be considered any type of recommendation or advice. And we are going through the Paper Money software application with our paper account. So keep in mind, there are going to be some differences between paper and live, specifically when you're looking at order fills and assignment and things like that. So as far as our agenda for today, the announcement is check out schwab.com/coaching for all of our upcoming trading workshops, advanced option workshops, and market drives. We do have quite a bit coming up for you here over the next few months. And then we're going to hit our market overview where we're going to take a look at the overall markets, major market indices. We're going to review old trades, place new trades, and walk through our trade management. So with that being said, let's move to our Thinkorswim platform and let's take a look at the S&P 500 because over the last week or so, we have been in a little bit of a consolidation period right here around this Fibonacci resistance. So if we take this recent range, whenever we are looking for resistance levels up ahead, as far as looking at some of those maybe profit taking levels that price may stall out, we're always going to take the highs to the lows in that trend, and it gives us those Fibonacci resistance levels to the upside. So that first level that we're really crowding around right now is that 77.56. If we can push back past that one, we could see a move up to close to 78.40 or so. Now, one thing that I think is a little notable here on this chart is we have this massive bearish momentum divergence. So from the last time that price was at its all-time highs before it reached these highs, we saw that momentum was a lot higher on this MACD than it is now. So it is telling us that we may be seeing a little bit of a reset. Maybe the index just does need a little bit of a consolidation around these levels. Maybe it'll be a little bit of a pullback. Of course, price will tell us that information. This momentum is just a warning signal, but this is telling us that price could see a little bit of momentum reset here before resuming that trend higher. Now, since we talk about our multiple time frame approach when approaching technical analysis and trading price patterns, we know that when we look across multiple time frames as a trader, an alignment across time frames is typically going to give us the highest probability trading setup. So if we just piece down one more, we can see that this time frame still aligns with what we are seeing on the other chart there. And what we may just be seeing is maybe a little bit of a triangle consolidation possibly. So you have a little bit of resistance up here and you see a little bit of higher lows taking place there. So a little bit of triangle resistance. Maybe this is the A, D, C, or I guess A, B, C, D, E, maybe down here around 77.25. So maybe just in the short term, a little bit more consolidation here. So now let's take a look at some relative trends, because I mentioned in the beginning we're going to do that as well. If you guys remember our relative strength grid that we created, now there's a lot going on in this page, but a reminder that relative strength essentially takes a underlying security or asset or sector in this case and compares it to a benchmark. And so what we're using is the S&P 500 with all of its sectors in the numerator. The S&P as a benchmark in the denominator. And so when this line is moving up, it is telling us that that sector is outperforming the overall index, which is where we tend to see rotation. Because if these sectors are outperforming on an absolute basis, just looking at price, making new highs, and the trend is accelerating, you may start to see that bleed over into relative strength as well. And so when you have that relative strength, that's where that capital is going to flow, because that is investors, institutional investors, looking for those pockets of outperformance or alpha in the market. So you're seeing this sector rotation at play. And since this is a trading price patterns class, I think we could point out a few patterns and possible patterns that may be taking shape within some of our sectors. So the energy sector looks like we are putting in a possible inverse head and shoulders here. If you can see in that lower corner, we still have a little bit of a ways to go, but there has been some pretty, I guess, kind of long-term basing that is occurring at some of these levels. Materials, the same thing. You're seeing precious metals start to firm up a little bit, especially since you have a little bit of a weaker dollar that the Dixie jumped back into that range. So maybe you're seeing a little bit of improvement in that space with that range. Now, industrials relative to the S&P 500, this may be saying that, hey, this sector, maybe you're seeing a little bit of rotation out of it. We're seeing a little bit of a descending triangle. And then maybe a little bit of a breakout. And I think this trend line is kind of one of the things that I wanted to touch on as far as like discretionary, but in general, when you're looking at stock charts. I'm going to open up this one for us. One of the first ways to identify a bottom reversal pattern or a change in the trend is using these descending trend lines. So in a downtrend, you are going to connect the highs. And so if you connect these highs, you can see however many times that a trend line has been touched, it gives the market a little bit more validity towards that level. And the more times it's touched, it's going to tell you that, hey, this is a level that may be breaking out soon. You can only knock on the door so many times before it opens. And so that's kind of a little bit of what you're seeing here. So I would say using trend lines, so connecting highs in a downtrend, connecting lows in an uptrend is going to give you your first and foremost signal of a trend change. So that's just telling you, hey, what is the trend looking like? So that's when we're seeing these maybe lower highs, lower lows start to shift to maybe a higher high, and then maybe we'll see a little bit of a higher low getting carved out. Okay, so descending and ascending trend lines, we can use those first to signal the first possible signal of a trend change, but we're going to use horizontal support and resistance as far as giving us a signal of whether we are truly getting a signal for trading in that sense. So you can see discretionary still hasn't really had that breakout yet, since it's kind of back to that former support. You're seeing a similar thing in some of these other areas. Communication services, still in a downtrend. Tech looking like it's repairing itself, maybe a little inverse head and shoulders there. Ton of strength in financials and healthcare, just weakness across the board in staples, utilities, and real estate, which honestly is pretty supportive of the bull market. We're seeing more of a risk embracing type of environment. Okay, so now that we've looked through that, I think the clear message that I want to focus on today is that energy sector. We're seeing a lot of repair there. And the other thing that we're seeing here as well, I'm going to pull up another chart for you, is our crude oil. So this has probably made a little bit of a headlines. Maybe some traders are watching some prices of crude oil, which you can see here with the candlestick chart. We have had quite a bit of an upswing, gaining about $9-10 over the last trading week or so. So there has been a little short-term strength here, which, as you can see with the correlation and comparison line to the overall energy sector, these two have pretty much traded it in quite a tandem for the majority of this past year. So that 40-day rolling correlation, or that 2-month correlation, is in a strong positive state there. So you can see just the influence that crude oil prices are having on that energy sector. So what we're going to look for when we look at some of these energy stocks, we're going to look for a little bit of confirmation, because we know that the underlying product, the underlying commodity that is influencing a lot of these stocks may have quite a pull on these sectors and these individual stocks. We want to look at what's happening beneath the surface. We want to look for layers of confirmation in the individual commodity itself, as well as those individual stocks. So we're going to focus on that today within those price patterns. Now, we're going to take a quick pause on that. So before we dive into the energy, we need to review some of our past trades. And so here are all the trades that we actually have open for some of our stocks here. So we had a short put vertical on Dell, and we still have a little bit of time on that. We just need the price of the stock to stay above 445 by expiration. So we still have about 2 weeks left on that one. Now, we had Micron Technology too. We traded, if you remember, we traded that and SanDisk a few weeks ago when we saw that false breakdown in semiconductors, and we traded some of those failed patterns there. So for Micron, we just need the stock to stay above 875 by next Friday. Same with SanDisk, by above 1460. So as long as it stays above our short strikes, we're going to keep that premium that we collected. And our deltas are still pretty small, around the 30 to 40 range. So we still have quite a bit of a probability that those stocks and then those options will expire out of the money. We're still within our risk parameters of Opendoor, still have a ton of time on that one. We're going to leave that one there. Wells Fargo, we have seen a little bit of a move off of support, so getting a little bit of a bounce here today in our profitability in Wells Fargo. The only trade that we're going to look at moving around is our NVIDIA trade. So we can see that we had that stop at that gap. I think this would give us a reason to kind of tighten up our stop just a little bit and place it right where we have those lows, where that consolidation is taking shape, okay? So that is kind of what we're seeing. So we move that stop up right around 216.20 or so. Okay, so now since we've done that, let's take a look at some of these energy charts, because that is the focus today. So we're going to start with Chevron, okay? And I've made a lot of drawings on these charts already. And before I go, I'm keeping an eye on the chat, and someone asked about, if possible, can you please share the grid? Are you looking at the relative strength grid? Because if so, I can share it right here for you guys in the chat. I'll paste that link in here. Just know that scripts are not guaranteed for accuracy, timing, or results. So we put that in there. Okay, now we can resume. Okay, so we've done a lot of drawing already, and I think you guys saw from the relative strength chart, and if you just chart the trend of the overall energy sector, you're going to see a lot of these kind of trend shift, trend reversal formations really stacking up here all across the energy space. So you're seeing that the price has went from making lower highs and lower lows. So if I just connect that trend line like I did before, when I showed you on that other chart, connecting the lower highs, we've seen that that trend line was touched 3 times before it was ultimately broken through right at this level. Okay, so that was our first signal that, hey, this downtrend may be broken. But we do need, a lot of times, need price to take its time with its repair phase to show that accumulation, because not everything is going to be a V bottom like the COVID bottom, for instance, or what we saw back in April when we had some of those quite parabolic moves off the lows. A lot of the time, you do see this longer term accumulation pattern taking shape where the trend goes from making lower lows, lower highs to higher highs, which we saw here with this slanted neckline of this inverse head and shoulders formation, and then a higher low gets placed. Okay. So that's kind of what we're seeing now. And you guys remember the rule about those slanted necklines? So we see this neckline of resistance here. What does this slanted neckline mean? If you guys can kind of put that in the chat. I remember we've discussed this quite a few times in our previous sessions about not necessarily head and shoulders and inverse head and shoulders forming these perfectly horizontal necklines. Sometimes they do have a little bit of a tilt, a little bit of a slant. So that definitely tells us that there is a little bit more bullish tilt to this because you're seeing a little bit of a higher high being made. So you notice that tilt to the upside, especially with a inverse head and shoulders formation, that's giving you a little bit of more of a bullish tilt. Now, a couple other things that we've drawn on this chart already. So if we're looking for a little bit of a confirmation, which as traders, we definitely tend to look for, we don't necessarily want to use technical analysis to predict. We want to use technical analysis to react to the price action, right? So we can see something happening in the chart, which gives us the levels to respond to accordingly to either manage our risk or take a position, give more conviction, things like that. So that 2% break of resistance will occur right around 202. So that's going to be our level for entry there, level to give a trader possible confirmation there. And Kevin, I see your answer in the chat. Upward tilt is better than a downward one. Yes, you are right. And so great to see you last week in Orlando. Same with the rest of you guys in the chat too. I've heard a couple of you guys mention that. It's so good to meet you guys, and I'm glad you're in this session with us today to continue this discussion on price patterns. So that 2% break really happens right there. Now, to take this measured move, we've done it before in this class. We always take the depth of the pattern. So the deepest part of the pattern, which is that head to the neckline, so support to our resistance, we project it from the possible breakout point. And so we would get our measured move that would take place right around 227.80. Okay, 227.80 would give us there. So for those of you that are more of a stock trader versus an options trader, you are probably looking to place a buy stop possibly that says, hey, wait until we hit this price, then send a market or a limit order to execute, and then putting a profit target or that OCO order for profit to the upside, a stop to the downside that could be at this right shoulder, could be right at the midpoint of this big large candle, wherever you decide to put it there as far as your risk tolerance. That is kind of how that order could be structured. Now we're going to use the options market a little bit, but before we do, let's take a look at some of the measures of confirmation when talking about some of these price patterns. So a couple layers of confirmation could exist with volume, so that participation, as well as momentum. So we're going to use the MACD in this case. So this is going to help us guard ourselves against possible false breakouts or just having more conviction in taking that trade, okay? So one of the things that we've talked about in the past when we're looking at inverse head and shoulders formations, and you'll kind of see each pattern that you're looking at in the market will have a different type of variation of volume that increases or decreases throughout the pattern, and whether volume, an increase in volume is necessary on the breakout. Now for this one, I know traders would like to see an increase in volume on the breakout, but it's not necessarily a entire requirement, because the biggest requirement with volume, especially with inverse head and shoulders patterns, occurs right around the shoulders and the head. So if we take a closer look at this one, I put this volume average study on. You can see the average line is that little yellow line there. And all we need to show a valid inverse head and shoulders formation volume-wise is to look for a larger than average increase in volume on the left shoulder, the right shoulder, and the head. So if you guys look here, you notice we got that in the left shoulder. So through formation in the left shoulder, we saw that. Through formation in the head, we saw that. And through formation in the right shoulder, we have seen that as well. So this is all giving us a validity to this possible pattern. Now, it's not a completed pattern until this shapes up and breaks through and gives us that confirmation. But again, this is going to be something that we're going to look at here, okay? Now, the other thing that's notable here is we can see that momentum has been in a bullish regime. So that MACD line, that blue line, has been above that zero line, see this purple line, for a few weeks now. And so what we're looking at is we want to see, in this case, we want to see that bullish crossover too. So we're getting a little bit of that ignition today for that bullish momentum. So we're seeing a little bit of a MACD bullish crossover where you see that little line there. So the conditions exist to give us more conviction in this trade. We just need to wait on price, okay? So with this one, I'm going to look over on the left-hand side here, and we're going to check the volatility regime real quick, because we're going to place an options trade, but we want to make sure our options trade really aligns with the volatility regime that we are seeing in this individual stock. So the stock already had earnings a few weeks ago. So we already saw that. There's no earnings coming up, so we don't have to worry about that. So there's no possible super increases in implied volatility here, unless you see something happen with the crude oil market. But in that case, we do still have a volatility, or that implied volatility percentile, sitting in the 41 percentile, meaning that we are still in the lower half of where implied volatility has been over the last year. So that could be telling us as option buyers that now may be a favorable time to be buying options. It wouldn't be a terrible time to be selling options either, because it still is a little bit heightened. So you still could get a little bit of a juice for the squeeze with the premiums, but it's not necessarily going to deter an options buyer away from maybe buying a call option if we did see that break above 202. That gives us that confirmation. So let's take a look at this market and just see a couple other things. We are going to see that this has actually given us a little bit of, here, I'm going to make this a little bit smaller so we can see this here, because I think the time frame was getting cut out down below. So I wanted to make this so you guys could see this. So we talked about the symmetry in price already, where we measured this base, projected it to the upside, which gives us that possible objective. Of course, patterns are no guarantees. We always have to say that here. But we want to look at the time symmetry as well, especially if we're thinking about buying options, buying a call option that tells us we have the right to buy 100 shares of the underlying at a certain price by a certain date, which is a way to speculate on the upwards movement of a stock. And so if we're looking here, this pattern really started taking shape near the end of May. Right now, we're at kind of mid-August. So it's about 3 months that this pattern has really taken shape. So if we're looking at the options market, we may want to look about 4 months out from expiration. The reason why is just because at that 30-day mark, that is where we start to see time decay tend to kind of kick in high gear, which obviously is not going to benefit us as an option buyer. We start to see that theta curve start to steepen during that time frame. So likely we want to close this out with 20 to 30 days left till expiration. So we're going to look about 4 months out to December. And we're going to look at a slightly in the money option here. So I'm going to collapse this left sidebar and let's take a look at the 190. Okay, so if we're looking at the 190 here, we can see it has a delta of about 61, meaning that if the price of the stock moves up about $1, our option that's trading at about $16 right now is roughly going to move up about 61 cents. And so if that option moves further in the money, you can see that delta gets larger and larger. And the result of that is that gamma. So that's that rate of change of the delta. So we're going to get a larger and larger delta or more of a move on our option as the price of the stock moves in our direction. And that works the same opposite as well. So if you see the price of the option moving out of the money, then it's starting to work less and less for you. But in this case, this can also tell us we have about a 61% chance of an option expiring in the money. So we're going to look at that one. We do have a pretty tight spread here. It's still within 10% of the bid and the ask. So that is a favorable one there. We have a decent amount of open interest, a good decent amount of volume today. So we're going to look at this one here, and I'm going to right click on this and I'm going to go to buy custom, and I'm just going to use with stop in this case. Okay. And so I'm actually going to change this to a limit on the upside. So this is going to change this to a first triggers all. So remember that we started with an account size of about 200,000, and we could risk up to $2,000 in any one trade. Now our trade size can only be up to $10,000. So what we can do in this case, we can place a really small trade, and let's just say we didn't want to put a stop on something, but we wanted to place a little bit of a small trade, have a smaller position size. This means that we didn't, since the price of this option is still within our risk tolerance, we wouldn't necessarily have to put on a stop in this one. We definitely can, but we don't need to in this sense. So we're going to focus on a conditional order entry because we're waiting for specific conditions. We're saying wait till the price moves above 202, and that could happen within the next few days or over the next week or so. And that would kind of give us an idea of where we could enter that trade for the option to give us confirmation. Now, we also had our profit target up near 228, right around there or so, 227, 228, that price could go to in the next few months. So that's a $25 move to the upside, even further from where the price is now. So what we're going to do, we're going to first make these good till canceled, and then I'm going to show you guys how to create those conditional orders. So we're going to base an option order based off of the movement of the stock. So we're going to go to the right-hand side here where we see that little gear that is showing up on the right-hand side when I hover over the green or that first order entry. We're going to click on that one here, and it's going to pull up our condition window. Okay, so we're going to go to conditions down below. We're going to say if Chevron is greater than or equal to 202, we are going to place a limit order, and we're going to link this limit order to the current asking price at the time. So this will still allow us to have control over our option price, but we're saying that whenever the price of the stock hits 202, which is that confirmation, that 2% move above resistance, we're going to place a limit order on our option at the current asking price. So that's what that limit offset of 0 means, linking that order limit to the asking price of the option. So we're going to hit save. Now, some of you may be wondering, well, what could the price of the option be at that time, especially if maybe over the next week we see that move up about, let's say, $5 or so. What could the price of that option be? Well, if we want to take a look, we can change this on the option chain. So see how we have this set up for delta, gamma, theta, vega, volume, open interest? We could just change this real quick to Theo price mark. And this allows us to run a little bit of a theoretical analysis on where the price of the stock could be given volatility, given time, and things like that. Or I should say the price of the option should be based on those factors. So let's just say over the next week, today is the 11th, let's just say that by the 18th, the price of the stock goes up $5. Let's say volatility doesn't do anything within this time. So let's just say volatility theoretically remains the same. The price of the stock goes up that much. Well, I'm going to click out of that window. And of course, I lost my order. This tends to happen all the time. We can see though that the price of that theoretical option, that 190 that we were looking at, it looks like that theoretical price would be around 1840 or 1850 or so. So it gains about $2 to $3. And that's just that delta working for it within that short amount of time. So I'm going to run this again, and I'm just going to go through this real quick. So that I can rebuild this trade. I think you guys have noticed this pretty much every time that I go in there and it accidentally clicks on the another option there. It just takes a moment for me to rebuild it. Okay, so we did 202 greater than or equal to, and then we linked this to the ask. Okay. I guess for those of you that like to see things more than once, this little blip works in your favor. So we're going to hit save. Okay. So again, that's buying that call option, which would probably be roughly around that level. So you can expect still stays within our risk tolerance within the next week. And then let's put a profit target on. So we said that profit target would be around 227. So let's do the same thing for this one. We're going to say that when the price of Chevron is greater than or equal to 227, we are going to send a limit order at the current bid, the bid when we're selling, and we're going to give it a limit offset of 0. So whatever the price of the option is, when the price of the stock hits 227, we are going to send a limit order at the current bid price. So we're going to hit save, and we're going to hit confirm and send. We're just going to double check our order here. So this is where, for those of you that have not placed a conditional order, this is where you can read back those conditions. Our order one description is here. When Chevron is at or above 202, again, that's our 2% break. And our measured move is at 227. Okay, and then we're risking what our premium is. Of course, it's going to be a little bit different from when we're actually purchasing it, remember. And then our max upside is unlimited because the price of the stock could theoretically go up to infinity. It's probably not going to, but it can. So we're going to hit send, and we have that one order in. Okay. So, and I see Mary put in a comment. She said, tough sector to trade with Trump tweets, unpredictable to the majority and very familiar to the few. Let's keep in mind that the market does have a mind of its own. So a lot of things that show up in the news later on, a lot of those reactions will typically show up in the price beforehand because you have the market. It has a collective of all different types of market participants. It has people with information, people without information. And so this is kind of where you're seeing some of that positioning show up. And that's why we always say that the market tends to speak louder than the headlines a lot of the time. If you are looking at the trend lines before you're kind of checking the news, which for those of you that are technicians and traders, may be a good practice. It's always good to know what's going on, but you may want to take a look at the charts first and see if the price versus the narrative tells a little bit of a different story. So I'm glad you put that comment in there, Mary. So just all kind of things to keep in mind. Okay, let's look at some of those other stocks that we have because we have about 10 minutes left in this class, a little bit less. Okay, let's take a look at, we're gonna look at just some of these price formations and we're gonna talk through them because I have a whole list of patterns for you guys like I always do. So we're just gonna talk through some different trade ideas because I don't know if we have enough time to really go in depth on another one. So Valero, we are seeing a little bit of a movement today. Now I wanted to bring this one to your guys' attention because we're clearly seeing quite a bit of a range breakout here. Okay. Now, something that I think is a little bit notable is that we are seeing a little bit of divergence in momentum. So while we may see a little bit of a bullish MACD crossover, it is diverging from where price was at the prior highs. So we talked about before in the past that, hey, momentum is just a secondary indicator since it is a derivative of price, but it could be telling us a little bit of a warning sign to a false breakout or just an early breakout, or maybe even that price is going to come and pull back and retest support. So that's kind of what traders will pay attention to, specifically when you're seeing breakouts like this. Another notable thing we can look at is you can see that price actually, with the strong move the last couple days, so price has moved about $10 from breaking out, we've had lower than average volume. So you have a couple of different warning signs there that price could either consolidate here soon, pull back and retest support, or maybe even re-enter this little range here. So we're going to take a measured move from the lowest part of this range where that doji was to the highest part of that range. And that's going to give us about a $27, $28 move. So if we did place this to the upside, this could say that Valero could run up to 345 or 346, wherever that is. Now I wanted to point out this old range from last time. So this is why we always use price, okay? Now the last time that we saw this, we had a big green candle right before, and we had above average volume right before when we had this move off the lows. So that was kind of telling us that we had volume and we had participation within the pattern itself. And notice last time when price broke out, that breakout candle, you actually had less than average volume, and you actually had less than average volume for the next trading week before then price did a little bit of a momentum, gained a little bit of momentum and gained its footing again to move higher. So use volume with a grain of salt here, because a lot of times during technical formations, you're going to see that volume pour in during the pattern. I think the biggest thing that you should weigh here as a technician, as a trader, is going to be price. Okay, so that's just a reason why price works. So that's just looking back in time, showing you a different scenario. This doesn't necessarily mean that this has to be a false breakout. It could just mean, hey, maybe a little bit of a momentum reset, maybe a little bit of consolidation around these levels. And if you do, since volatility may be a little bit heightened here, if price does come back and retest support, that could be where we could possibly sell a put spread or sell a cash secured put, maybe at that level of old resistance, now new support, what we call that polarity zone. Okay, so that's an idea there. Phillips 66. I wanted to look at this one because it was similar to what we saw with Valero as well, except you did see above average volume with that move higher. Today, you're seeing a little bit less than average. You're seeing a little bit of a momentum shift there. But if we take a measured move from that range, we take the highs to the lows, that's about a $14 move. Maybe a little bit even more than that. So it's saying that, hey, price could move a little bit higher up to 230 possibly. Momentum's diverging quite a bit as you see that MACD is making a little bit of a lower high. So it could just tell us, hey, this is due for a little bit of a consolidation. And I kind of want to take it back to what we were seeing in crude prices, because I know that we actually pulled up a crude chart with a correlation study and a comparison study before, which you can certainly build on your own. We have seen this little breakout in crude prices. And so let's take a look at these for a second. And this could be why we may see a little bit of a pause or maybe a consolidation in energy stocks. So we have been in this bearish channel for the last few months, ever since reaching those yearly highs. Okay, so we've been making lower highs, lower lows, showing that we have been in a downtrend here. Now, momentum has kind of reset a little bit. It's been fiddling around this bullish regime. So it's kind of shifted gears to a little bit of a bullish regime here, and it's looking like it want to make a little bit of a crossover. So if we're going to just look on a shorter time frame here, I think we can find another pattern. So if you guys look here, we have those lower highs and we have lower lows, and we can actually see that these lines are converging. And so for a wedge, falling wedge, which is what we saw here, you need 3 touches of a trend line on one side, 2 touches on the other to make a wedge. And so typically, a lot of the times you see that with falling wedges, price is compressing, 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 and so is volatility. And you get that squeeze, and it typically happens in that opposite direction. So you saw that a little bit. But the interesting thing is you still had less than average volume on the crude contracts. So, and you're getting these kind of tiny doji looking, little spinning top candles. So this could be telling us like, hey, there may not be enough participation to the upside, especially on this entire last swing. Because notice the last trading week or so, the last 5 or 6 days, this rally has all been on lighter than average volume. Okay. So you can see that there. Now, this could be telling us we may get a little bit of a pullback to that former resistance, now new support. So that could take us maybe to 77, 78, or maybe just even a consolidation around these levels here as momentum tries to kind of grind its gears and price finds its footing. So that may be kind of what you're seeing. That may be translating over a little bit to the energy sector, while positioning is still, I would say, not as what we call decisive or high conviction quite yet, even though you're starting to see those breakouts. You can kind of take it back to the kind of that root commodity that has that higher correlation. So I wanted to make sure I showed you guys a little bit of this inner market analysis, because as a technician, as a trader, you need to understand the entire market in many different markets as far as cross assets, and not just the one specific market that you're trading, because a lot of the times there's going to be multiple factors, multiple macro signals that will be influencing that market in which you're trading. And so this is just kind of one example today, kind of what we walked through of how to look at relative strength, how to look at the individual commodity, doing a little bit of correlation work, and looking at layers of confirmation and conviction within first price, but then also using momentum as well as volume as well. So hopefully this kind of helps. You guys know this webcast is recorded. If this was helpful for you today, please click that thumbs up button, send a like. It helps other traders find this information as well. Mike, thank you so much for helping out in the chat. Thank you all of you for your questions and discussion in there today. Please give Mike a follow on X. He is Mike Fairborn CS. I am Rachel CS. And please subscribe to us on Trader Talks Schwab Coaching on YouTube. I hope you have a great rest of your day. See you later, traders.